Good morning, everyone. Thank you very much for coming out and sparing the time to discuss Egypt particularly. Thank you very much, first of all, though, to Craig Stevendale and his team at Herbert Smith. Superb hospitality. And thank you, which I never take for granted, the work that I know Dr. Charles Gordon and Nicholas Wade are doing at Menas, quite superb all the time, and the knowledge on the region. And I'm glad that my new colleague here, Elwi Taimur of Pharos, is actually listening to me in public for the first time. It's quite difficult to talk. I've been asked by Herbert Smith, by the way, on an admin front, anyone listening in on the conference call to mute their phones. Quite difficult on a country like Egypt, which is highly diversified, to try to focus something for all of you, because you're such a wide group, but I'm going to do my best to try to help understand the trends that we're seeing, from all of you in banking and insurance to aid. I know one or two of you are looking at that, as well as legal work and so on, and oil and gas, obviously, too. So I'll try and answer your queries. So be ready, please, with the questions if I don't answer what you were thinking in your head on this in this presentation. Now, I want to bring this up because we have to set the scene for what's happening in Egypt and the region. Demographics is key. All over the Middle East and North Africa, one of the youngest regions in the world. I've seen it when I was working in Saudi and in the Emirates, obviously. But in the case of Egypt, when I started looking at Egypt in the past in the city of Beirings, the population of Egypt was about 52 million people. Now it's over 90 million people, growing at the time historically 20 years ago, 1.2% per annum. It's now growing at over 2.8% per annum, which means in the next 15 years, there's going to be an extra 35 million Egyptians. And I'll come to that at the very end because it sets the scene for what needs to be done in terms of infrastructure. And of course, these are opportunities. It isn't just a threat, but it is a threat nevertheless. 98% of Egypt's water comes from outside its borders. But it means there's going to have to be very significant investment on behalf of the government. Economic growth is going to have to grow very significantly to be able to employ the number of Egyptians who are looking for work right now, never mind in 15 years' time. And clear repercussions in terms of government provisions of services. Health, housing, education, clearly, and political issues too, clearly. Real GDP growth. Some of you, if you covered Egypt for a long time, knew that after the economic crisis in Egypt from 1999 to 2004, the then government introduced a number of very good policies to change sentiment. And sentiment is key, and I'll try and remember to come to that towards the end. You have to change sentiment. Economic growth grew by 2004 from about 2%, within 2 years growing at 6%, reached a peak of 7.2% in 97. Also, that year was a peak of foreign direct investment, about $12.5 to $13 billion, making it the highest recipient of FDI in the whole of Africa. But it's a highly responsive economy, and I'll come to that too, an enormous strength, but I'll mention that in a little while. But economic growth a year ago was about 4%. We're estimating now it's about 3% because of the issues related to access. There's some seats at the front, if you want to come, empty rows at the front. Economic growth about 3%, basically because of the issues related to accessibility of foreign currency. And some of you may have seen news in the last few days, General Motors and LG suspending their operations because they can't bring in the parts they need to create cars, in the case of General Motors, and LG, it's white and brown goods. And what I'd say is, I mentioned already about population growth, we really need to get economic growth up to about 8% in Egypt. It is achievable. Egypt, as I said already, is, and I'll say it probably again, highly responsive economy. Foreign exchange reserves. This is key, trying to set the scene in the background now. Rose sharply from 2004 as confidence grew, as trading grew, as exports grew, and has been relatively stable after the introduction of capital controls following 2011. And there were and capital controls have been increasingly restricted in the last few years, and as different loopholes have been closed. And currently, at the end of December, the number is just under $16.5 billion. And you can see it's almost a straight line since the end of 2012. Trade and current account balances, they do not look good. But obviously this is key. And I'm obviously trying to say it's actually pretty bad. historically, the negative numbers were covered by very strong FDI and capital flow into the stock market and other issues. We don't have that at the moment, so basically now you're seeing Egypt naked economically. So we need to reset policy. And something you want to know is, obviously, is policy going to change? And there's a need for foreign currency and exports, and you have a number of concurrent problems. Global trade, as you know, is slowing. So Suez Canal revenues will be a concurrent state of global trade, have slowed. Tourist arrivals have been hit on a variety of issues the last few years by political issues, and more recently by the plane explosion in Sinai. But there are still some bright spots here. But I'll come to the bright spots. Food imports and exports, significant import. There's a spreadsheet to the front. Significant importer of food. But with over 9 million acres of land, clearly Egypt could do so much more to develop food production, make it much more efficient within the country. And the government is planning several million more acres to expand production, although there's an issue there about water, obviously, clearly. But this is one of the issues about clearly on imports. Oil trade, again, exports have fallen away as domestic demand has taken up some of the slack in terms of gas. And clearly it's hurting the trade balance. But the good news is Saudi Arabia has come to Egypt's aid in a timely fashion and is promising $20 billion of support for Egypt in the next 5 years. The details have yet to be sorted out, so please don't ask me a question because no one knows, actually. And the president is going to visit Saudi Arabia soon, within a few weeks, to discuss how it's going to be implemented and how Egypt will be helped. But that's a significant backstop to helping Egypt in terms of those numbers, and that's a positive element for the short to medium term. But that said, too, there is increased investment in the sector. Some of you will have seen, obviously, all of you will have seen the news on ENI in the Zohr field north of, in the coast off Alexandria. You'll also have seen the significant investment plans by BP. But they're not alone. Other oil and gas companies are also increasing investment, while some companies have faced problems, clearly, in getting paid. But there is significant interest still in this sector. So don't discount that. It's very important. The budget deficit. Now, clearly, this is an issue all of you will know about, but it's a problem, actually. You can see it even in the European Union, where countries regularly break the EU guidelines for the budget too. But it is significant here because it's an issue and reflection of both the uncertain times, lower growth, and the fact that subsidies. And clearly, the government has to cut subsidies. It is an enormous government sector, between 6 and 7 million government employees, and the numbers have grown sharply even in the last few years. And subsidies have to be cut. The government, though, have taken some steps to tackle the subsidy issue. And if you actually look at this chart, you see the growth in subsidies, but in the last 2 years, how it's been tackled. One of the issues in terms of food has been to give out smart cards to the population to limit the amount of bread that's being bought. And as a result, wheat demand has fallen by 25%, which is obviously a significant positive. And it's being rolled out across the country. There was a cut in the petrol subsidy in July 2014. We had assumed it would happen again, another cut last year, but it didn't happen. And we'll come to that later about why not. But we'd expected it, and it should have happened. But the government is focused on this. The other subsidies, it's interesting, trying to get details of this, but we assume much of this transport, state media, a whole variety of other issues, but a lot of it transport related in the growth in the last few years. And you'll see, if any of you are reading Egypt on a daily basis, you'll see that the government is focusing on trying to cut, for example, at Egypt Air, trying to get them to become much more business-oriented and focus on making more money and cut the subsidy. But it's quite clear all of these companies are going to have to be made much more commercially viable. And we'll come to the positive element of what that might mean for the stock market. As I mentioned already, tourist arrivals dropped last year, about 9 million, just over 9 million tourists, at the peak about 14 million in 2010. ahead of the upset troubles, and still continuing, obviously, to be low. However, I'm privy to some of the discussions on improving security at the airports. And it's very clear that Egypt's putting in a significant amount of effort to improve security at the airports, which, if put into practice and continue to be followed up, will make Egyptian airports amongst the safest in the world. And I wouldn't say it lightly. This is coming from experts. If they're fully introduced, we'll put it in the top tier of security. But they're still being worked on in all of the key airports. And it's good for Egypt that it's doing it, and it's accepting that advice because it knows the necessity to grow tourist arrivals again and give comfort to airlines. And the expectation is that flights will resume to Sharm el-Sheikh within about 2 months at the latest. So we'll get another boost in time to foreign currency reserves. Now, the background picture. In the last few years, Egypt's received significant help, some of it initially from Qatar, especially when there was a Morsi administration. But after he left power, significant investment from help. I'm careful with my language. Significant help from Kuwait, the Emirates, and from Saudi Arabia. Some of it grants, some of it loans, some of it deposits in the central bank. And you see that by the spike in 2014 and then some more in 2015. However, given the fiscal restraints in the Gulf, it's going to be quite difficult to maintain that level of support for Egypt. Hence the support in an indirect way, the hydrocarbon sector from Saudi Arabia. But Saudi Arabia is facing a budget deficit of its own, because we look also at what's happening in Saudi, about over 20% of GDP. That is a significant hit for Saudi, and you're going to see also budget deficits in the Emirates and Kuwait. So they have their own problems to have to deal with. To be able to supply the levels of finance to Egypt won't be possible in the foreseeable future. Suez Canal revenues raised this already, concurrent indicator of global trade. But the great news here, and it's such a shame that the Suez Canal wasn't made priority in terms of the Suez Canal development, because we see enormous interest. Now, they see this from the UK, but I also see it from the German trade missions, Italians and others, massive interest in the Suez Canal zone to be able to utilize Egypt as a manufacturing hub for particularly into not just obviously the domestic market, which has been overlooked, and I'll come to that, regional market, its trade agreements with the rest of the region, with Africa and with Europe. And the fact that you've got a population which, many of whom speak English, the proximity to Europe, you don't have issues of copyright problems and piracy that you see in other countries, in Asia in particular. So we see very significant interest at the moment from infrastructure companies, but also companies looking to manufacture. And I think that could be a bright spot in a few years' time once it's developed. And the good news is you've got a decent guy who's been put in charge, Ahmed Darwish, of developing that zone, a civilian. So that's a very bright spot to add to the thousands of acres to be developed for manufacturing, which will be guaranteed power to help investors coming in. In fact, there's a small British trade mission right now today visiting the zone. One more negative before we start moving on the positives. Domestic rate of inflation. I've gone on about this for a long time, for over 20 years. The underlying rate of inflation in Egypt has been unsustainably high and is above the general rate of global inflation. And something has to be done to bring that down. It's domestic inefficiencies, much of it, and much of it related to food. I'd always advise looking at the headline rate, not the core rate. Leave food in, because it's key that you look at what food price inflation is. And obviously, for the point of view of the poor, it's unsustainable. But it would lead to, I have to say, opportunities if we believe in them in logistics, especially in food, which the introduction of supermarkets, large supermarkets such as Carrefour, are actually helping. Now, banks. Very strong deposit growth in the market, and very strong indeed. And if I actually look at some of the numbers, I'll mention in a sec, but the banking and financial system, I mentioned already the crisis Egypt went through from 1999 to 2004, that if you, after that, the then central bank governor introduced significant controls, cleaning up the banking sector of foreign debt, of significant debt, looking at the use of assets in the banking system. And the banking sector went into this crisis in a tremendously good shape. They are not like banks here. They're not like banks elsewhere in Europe. If you actually look at loan growth, last year was about 21%. Deposit growth about 21%. The year before, 20%. 2013, 16%. Very strong deposit growth. Some of that obviously due to capital controls, but it's very strong deposit growth into the banking system. And the good news is here, when I talk about the strength earlier, that we mustn't underestimate the strengths. There are very few countries that could raise $8 billion equivalent in 1 week on minimal terms for the Suez Canal bond. I'm not going to the merits of whether that was good or bad, but the fact that the government was able to raise $8 billion in just over a week says much about the informal economy, which is huge, says much about the cash-driven society, which is enormous. And in a world full of debt, Egypt is a paragon of virtue, frankly. Private sector debt below 20% of GDP. In most countries, it's well over 100% of GDP, and well over that for the United Kingdom, as you know. Household debt below 10% of GDP, and here again, it's over 100% of GDP, which for me means it's a tremendously good news for the financial services sector. Banking, insurance, mortgages, investment banking, brokerage, everything in terms of the provision of financial services. Quite superb backdrop for a growth of that sector. That liquidity should never be underestimated, how that keeps the economy ticking over. Only 1 quarter since the beginning of 2011 has been below zero in terms of growth. It's always been positive. It's the informal sector, it's the liquidity, which has kept the economy growing strongly. So it's solid. Government debt has grown, though it's grown from about 70% to about 90% of GDP. So it's beginning to be squeezed. But much of that, on the positive side, is domestic. It's not foreign. Again, a major strength. So we've got to balance the negative with the positives here to realize those strengths within the economy. And they're always underestimated, I have to tell you, by commentators from outside, and even within Egypt. However, look at the business sector, PMI sentiment. Took a dip after issues of accessibility of foreign currency began to bite late last summer. Picked up a little bit, but has fallen back a bit in the last few months. We're probably likely to see another dip below 50. It'll be below 50 for February. So that's an issue. The majority of this now, as the currency crisis is hitting companies. And before we go on to some of the commentary on politics and so on, water availability, and I'm going to answer some questions on oil and gas. I'll come on to in a sec. This is an issue. For those of you in insurance looking at risk, I wanted to put this in because when we gave a talk at Lloyd's a year and a bit ago, it was an issue that some people were looking at. As I mentioned, 98% of Egypt's water comes from outside its borders. This year, Ethiopia facing a drought. There's a dam being built which will restrict the flow of water into the Nile. Population growth is high, and you see fresh water availability, which is now about, I'd put our forecast out for about 2020, but at the moment it's about 650 cubic meters of water, fresh water a year. The critical point's 1,000 cubic meters of water a year. So the opportunity here, and the President's mentioned this, he mentioned it in London on his visit at the end of last year, and he's been mentioning it again lately, are the opportunities for water desalination and for wastewater plants. There's going to have to be very significant investment into that sector. And clearly, over the last year and a half, in fact 2 years, we've seen massive investment into the electricity sector. Even Siemens alone planning to invest about $20 billion. GE of America putting in $500 million of investment. Well, in fact, more than that, actually. Nearly $1 billion. And other companies planning solar and wind farms across Egypt. So the issue is massive opportunities in power generation still, and for the future because of that population growth and in terms of water. And obviously, I know one of you in particular looking at education, clearly investment and looking at trying to improve educational opportunities. And I should say, we met the other day, Elwie and I had lunch with a number of ambassadors, and one of them, the Singaporean ambassador, brought up the issue of education. And the fact that the President had a view before then, and you could see it in his language, and after Singapore. He now really gets and understands the importance of improving education for Egypt. But the issue is if the machinery in Egypt gets it, if it can do it, if it can make the change, particularly in the curriculum, which you really need to do to be able to improve Egypt. And I know the British government is talking through the British Council, the Finnish government is talking to, as well as the Singaporeans and others, to improve the educational system in Egypt. Now to the crunchy points. Stresses. I mentioned already, population growth is too high, major economic and political repercussions. Economic growth too low. We've now seen a flattening of GDP per capita, so people are feeling it. It's biting in terms of the economic growth. Foreign exchange reserves remain under pressure. The trade deficit is unsustainable, and the government budget remains too high. The rate of inflation, too, is high and hurts the poorest the most. But the strengths, as I mentioned already, the informal sector. Very difficult to measure how much it is, but it's sizable. And you can meet company after company where people will turn up paying, in some instances, millions of Egyptian pounds in cash to pay for goods. It's a legacy of what's happened in the past in the 50s and 60s. But it means it's very good news for the financial services sector. There, as I mentioned already, very low levels of household and private sector debt. As I mentioned, the banking sector is in good shape. And the consumer sector is solid. Carrefour, in the last full year numbers, I don't know yet for 2015, but the year before, 2014, grew 44%. How many countries in the world can you achieve that level of growth? Consumer sector is buoyant. You go and speak to Unilever, still investing significantly. Mars, PepsiCo, Coca-Cola, still investing. Samsung even continuing to invest $500 million for the consumer sector, because historically the consumer sector within Egypt was ignored and nobody realized how big it was. Now you have shopping malls and the big chains are coming in. People are seeing at last what a sizable market it is. And it's going to be made bigger when the new malls open. Majid Al Futtaim, some of our friends in Dubai, we work with her, investing now even more money, an extra $1.5 billion on top of the $1.5 billion they're already investing in new malls. In fact, just broke ground on another new mall near the airport. That is significant. Even that $3 billion investment even would be significant in the UK, frankly, never mind in Egypt. So non-oil FDI is rising. Last year, Kellogg's came in to make 2 acquisitions in the pharmaceutical sector. There is still continuing M&A activity you don't hear of, but it's happening. And there'll be more of it, because it continues right now. That's a positive trend, because we have different levels of risk to our friends in the Gulf and elsewhere, frankly. They're taking a longer view in the marketplace. But still, Kellogg's come in, despite everything else, despite looking at the issues related to currency, still come in and made 2 acquisitions last year. I have to say it's also because it's easier to buy a company than to start a new one. I have to say, some of you know this, especially the lawyers, how difficult it is in Egypt. But it's still very buoyant. So the consumer sector remains great. And if you speak to Unilever, even though the market's softened a bit in the last month or so, there's still, I spoke to the CEO a few days ago. Almost all the new products they launch are successes. And invariably, too, some of the higher quality brands they thought that they might not do well, have done spectacularly well. So it's a great consumer market. FDI remains solid. And FDI, non-oil FDI, as I said, is good. And FDI in the oil sector still continues with news from BP particularly. Infrastructural comments, as I mentioned already, very significant flow of investment and planned investment in transport, in the Suez Canal zone, in water, housing, and electricity. Very, very important. The President putting in over £1 billion Egyptian pounds planned in the next 2 years to build, I think, about 600,000 new units of homes. So all of that is significant infrastructure building, which helps growth on the ground in Egypt. Clearly, there are plans, too, for a new capital city. I don't want to be drawn into that at the moment. I think it's an inefficient economic response to the stresses Egypt is under. I would rather more focus on projects around the country. And I have to say, in general, I still think the economic responses to the economic stresses of Egypt remain inefficient and could be far better. Politics. Sinai remains a problem. Those of you who receive the report will see that on a regular basis the number of incidents which happen, IEDs exploding. But I have to tell you, for most of us, for most people in Egypt, most of the time, life goes on as normal. I've said this for years, since 2011. Even at the time of the uprising in 2011, you could be 2 streets away from Tahrir Square and the former Egyptian ambassador, British ambassador to Egypt here, would know the problems of tear gas because you were closer than most. But just a few streets away from Tahrir, life went on as normal, frankly. And in Zamalek and elsewhere, people sitting at coffee shops who would then go off and decide to go off and do something. Life goes on, for most people, most of the time, normally. And I'm asked the question regularly, is it safe? Yes, it's safer than the streets of Hackney in London where I used to live, frankly. But there is a threat, and we shouldn't underestimate that threat either, and especially from Libya. And the threat from Daesh in its affiliates in Sinai and in Libya, and the long, porous border Egypt has with Libya. So it's a clear imperative of Egyptians' military to tackle that threat both in Sinai and in Libya and work with its friends in the Gulf, particularly the Emirates, but increasingly you will see, more than likely, with Europe, action on Libya, because of the threat that Libya now is to the European Union. But the region's pulling Egypt to do more elsewhere, for example in Yemen, where Egypt would like to focus its attention on its immediate borders in Sinai and in Libya. Within the country, I have to say it's quite interesting looking at the body politic, because I'm still a Khawaga looking in. But I have to say, when I look at British politics from outside, I also think this country is imploding, but that's my view. I'm not an expert anymore. I may be Scottish, but I think the Scottish position is unusual. But the country has fragmented politically. There are different constituencies who want different things, and they're all pulling in different directions. So that friction can be seen in a variety of ways. Some of it exceptionally negatively, and some of it more positively. And that's where the stress lies for the president and the military and the government in trying to work with those constituencies. But I still think they could do a better job, because the key in the end is growing the economy. Because if you do that, you can then begin to work on the other problems. But it's not alone. There are problems. And the limits of expression, for example, which I'd supper with the Foreign Affairs Council for the European Union on Saturday night. And only the day before yesterday, when they met they met a number of MPs, and one of the MPs, those of you who know him, called Muqtada Mansour, called the council terrorists to their faces. It didn't go down very well. So the level of engagement obviously has to be made better. But the limits on the expression for the young particularly are annoying. The fact that the government withdrew, India just did, the free application of the internet on Facebook. 3 million people had signed up, is I think, an element of the state going too far. But on the positive side, I have to say, you'll have seen this as I finish, the Parliament is already noisy. It's questioning. It rejected the civil service law. They've tweaked it and it will be passed again. But they ask questions, and that's good. Many people had assumed that there'll be a compliant structure. It's not. They have their own constituencies to deal with. So I'm positive about what Parliament can achieve. But it's still learning. The process politically is still growing. And we always look at it from a perspective of a British example or a European example. But it does need time to evolve. Take time, and we've got to be able to help, I have to say, in setting up the infrastructure of governance. And there is still wariness on the Egyptian side about what we mean when we offer help. But the fact is that it does need help in the institutionalization of governments, of the elections, and so on. But it's still a problem. So looking out, I keep being asked questions, and we had this the other day, again, at lunch, what's the key thing that would bring investors into Egypt? Well, the first drawback right now, clearly, is you've got to resolve being able to be paid. Vodafone and others, the oil and gas companies, and you've had British Gas, because I know this is an issue quite a number of you I spoke with this morning before I came in are worried about this for investors. Will people who are investing get paid? Will they be able to get their profits out of the country, the dividends? Short term, the answer is probably no. Once there's a devaluation, and the devaluation has to happen at some stage, as it did happen in the early part of the 2000s after the last crisis, then I think we can help reset policy. But I think the government has to, I'm not going to give the answers of what we're recommending, but the government has to work on a program of responses to be able to change sentiment and turn it around. And it's doable. As I mentioned already, Egypt's a highly responsive economy. Within 2 years of the last crisis, the economy was growing by 6% per annum. So you can turn the economy around. If you change sentiment, you can turn the economy around. But you've got to be able to focus on changing that sentiment, which means working on a number of issues, such as making the establishment of companies easier. Because they're doing business surveys, some of you will have seen it drop to 131 out of 140 countries. So that means the state system has to say, be told, stand back, we don't need your signature. We're going to make this very easy to set up companies and monitor companies and govern companies. A lighter touch in terms of governance. I'd like to see that. I don't see enough signs of it at the moment, but I'd like to see it. So I'm a believer in Egypt. Yes, I'm an investor in Egypt. I started my own company. Now I'm working with Elwi and Taimur and the colleagues at Pharos because I believe in that future in Egypt. I believe in the financial services sector. The fact that the economy is highly responsive. It has enormous stresses. As I mentioned already, the responses to those stresses are inefficient. I want to see greater attention on the economy and other issues related to the young, particularly in terms of education, in terms of more freedom of expression, clearly, because it does reflect in the end on investment. But we already know there's billions of dollars of investment waiting to come into Egypt, which even if it was to come into the UK would be significant. So if they're able to get it right, with the central bank and the government to get it right, then we'd see quite quickly, if they're able to do it by the summer, get another between $5 and $10 billion investment FDI into Egypt to start growing the economy quickly and boost exports, because that's what we need to see. But anyway, on that note, I want to finish so we can have questions and be able to take them from you now. Thank you very much.